3 weeks ago, I was at a jewelry shop in Mumbai. My friend Vikram owns it, been in the business 15 years. I asked him a simple question. How's business? He looked stressed. He said something I've never heard him say before. I can't even get silver anymore. I said, what do you mean you can't get silver? Silver is everywhere. He said, not for me. My supplier told me they can't promise delivery. I have orders backed up 8 weeks. 8 weeks. My customers are calling asking when their wedding jewelry will be ready. I've never seen this before in 15 years. That moment, I realized something important. This wasn't about prices going up a little. This was about availability becoming a problem. And here's the thing Vikram didn't understand, and what most people don't understand. There are 3 separate reasons this is happening. Right now. All at the same time. And when 3 separate supply problems hit the market simultaneously, prices don't gradually go up. They spike. Right now, silver mines around the world are closing down. Not some. Multiple major mines. Here's why. When silver prices drop, mining becomes unprofitable. Companies stop digging. Workers get laid off. Equipment shuts down. Mines go dark. But here's the problem. It takes 7 to 10 years to open a new silver mine. Think about that. 7 to 10 years. Permits. Government approval. Infrastructure. Training new workers. You can't just flip a switch. Right now, we're in the gap between when old mines closed and new ones open. And that gap is creating a global shortage. The London Bullion Market Association, that's the biggest silver storage facility in the world, just reported that global silver stockpiles are down 35% in the last 12 months. 35% gone. At this rate, critical shortage levels hit in 18 months. But here's what's important. India doesn't wait 18 months for problems to happen. When global silver runs low, sellers stop exporting. They hoard what they have. Less silver gets shipped to India. And when less silver reaches a country of 1.4 billion people where silver is part of every wedding, every festival, every celebration, you get scarcity. Scarcity creates desperation. Desperation creates prices people can't afford. Now add this. India's silver demand isn't stable. It's accelerating for 2 completely different reasons. First, every solar panel installed in India needs silver. Not a little bit. Significant silver. India is installing 50,000 solar panels per month. That's 600,000 per year. Each panel locks silver into infrastructure. That silver is gone from the market. It can't be used for jewelry. It can't be used for anything else. Second, we're heading into wedding season and Diwali season. That's when India buys the most silver jewelry in the entire year. Normally, seasonal demand pushes prices up 10 to 15%. That's expected. But this year, industrial demand is already competing for silver. Global supply is already low. And now seasonal demand hits at the same moment. It's not additive. It's multiplicative. Think of it like this. Imagine you're thirsty. You go to buy water. But now there are 3 separate lines of people buying water at the exact same time. Your line, the factory's line, and the seasonal festival goer's line. All competing for the same tank. The water gets expensive. Fast. Here's where this gets interesting. And I want to be very clear. This is not a conspiracy. This is just bad coordination. In February 2025, the RBI launched something called the Bullion Investment Scheme. It gives tax benefits to anyone who buys silver and holds it for more than 2 years. It's actually good policy. Less black market cash. More transparency. Regulated financial flow. I support the intent. The problem? They didn't coordinate with supply-side planning. In the 60 days since launch, silver purchases through banks jumped 45%. 45% more demand created by government incentive. On top of jewelry demand. On top of industrial demand. Think about what happened, government says. Here, we'll incentivize you to buy silver. Millions of Indians listen. They buy. But nobody asked, do we have enough silver for this? Nobody looked at global inventory. Nobody checked the mine closures. Nobody coordinated with supply-side capacity. They just launched the policy. Global supply, going down. Industrial demand, going up. Government incentives, going up. All 3 moving in opposite directions from where they need to be. Here's what happens when supply constraints, industrial demand, government incentives, and seasonal demand all hit the market at the same moment. Prices don't gradually creep up. They spike. I'm going to make a specific prediction. Write this down. Set a reminder. Come back and check this in 90 days. Silver prices, plus 25 to 35% in 90 days. By end of Q2 2025, June 2025. This is based on LBMA inventory data, RBI policy timing, industrial demand acceleration, and seasonal jewelry buying patterns. Here's what I don't know, the exact timing. It could happen in one sharp spike over 2 weeks. It could happen in 3 waves. But the endpoint is certain. The math is simple. Less supply plus more demand equals higher prices. There's no way around it. If you're planning a wedding in May or June, you just added Indian rupee 2,000,4000 to your budget. Unplanned? Unavoidable. Now, here's something important I need to say. Before you decide if you believe this or not, you should know, I've made predictions before that were completely wrong. Last year, I predicted copper prices would drop 15%. They went up 40%. I was spectacularly wrong. I predicted oil would stabilize at $85 per barrel. It hit $110 2 months later. I'm not perfect. I'm a human analyzing data, and sometimes the data doesn't tell you what's coming. What's different this time is that this isn't a prediction based on one data point. This is confirmed supply shortage from LBMA data. Confirmed demand surge from RBI bank purchase data. Confirmed mine closures from public record. Confirmed seasonal timing from historical patterns. All 4 confirmed. All pointing the same direction. Could I still be wrong? Yes. A new mine could open faster than expected. Demand could suddenly drop. Government could reverse the policy. Something unexpected could happen. But here's the thing. Even if I'm wrong about the timing, I'm not wrong about the direction. Supply is going down. Demand is going up. That's physics. That's math. Eventually, whether it's in 90 days or 150 days, prices go higher. So use this framework. Assume the direction is certain, but the timing could be off by 30 days either way. Adjust your actions based on that assumption. If you're a jewelry buyer, someone who buys silver for weddings, for Diwali, for personal use, there are 3 concrete things you should do right now. Action 1. Buy within 2 to 4 weeks. If you know you're going to buy silver jewelry in the next 6 months, buy it now. Not next month. Not in April. Now. In the next 2 to 4 weeks. Buy now in March, 500 Indian rupees. Buy in April, 560 Indian rupees, which is 12% more. Buy in May, 620 Indian rupees, which is 24% more. Buy in June, 675 Indian rupees, which is 35% more. Every month you wait, you're essentially betting that prices will drop. The data says they won't. You have a 2 to 4 week window where you still have buying power. After that, you're paying more for the same thing. Action 2. Lock in prices with your jeweler today. Call your jeweler right now. Tell them you want a custom piece. Get a quote. Ask them if they'll hold that price for 30 days. Some jewelers will. Some won't. But ask. Because here's what happens in the next 30 days. As prices start rising in the market, retail jewelers will raise their prices even faster. They're scared of being stuck with low prices while their costs go up. So they front-run the market. If you lock in a price today, you beat that rush. This is the single most important thing you can do. Price lock equals protection from the spike. Action 3. Verify hallmark. Don't overpay for fake. When prices spike and people panic buy, they buy anything that looks like silver without checking quality. That's how you end up buying 80% pure silver jewelry when you think you're buying 92.5% pure. Before you buy anything, look for the hallmark. It should say 925 or 92.5, which equals true silver. If it says 80, that's not pure enough. If there's no mark, don't buy. When you're rushing to buy before prices spike, you get careless about quality. Don't. Take 30 seconds to verify hallmark. If you're an investor, someone buying silver specifically for value appreciation, your strategy is completely different. You want to capitalize on the spike, not protect yourself from it. There are 4 things you need to do. And the first one is the most important because it protects you from making a stupid mistake. Action 1. No leverage. Absolutely no leverage. I'm going to be very direct about this. Do not buy silver on margin. Do not borrow money to invest in commodities. Do not use leverage. Here's why. If you invest 100,000 Indian rupees and prices drop 10%, you lost 10,000 Indian rupees. That sucks, but you're okay. If you use 5x leverage, borrow 400,000 Indian rupees to buy 500,000 Indian rupees worth, and prices drop 10%, you lost 50,000 Indian rupees. You've wiped out half your capital. If prices drop 20%, you're negative. You owe money. Leverage turns a normal market correction into a catastrophic loss. And commodity markets always have corrections. You're not a professional trader with algorithmic stop losses and risk management systems. You don't have those tools. So don't use leverage. Buy only what you can afford to lose. Action 3. Buy physical silver, not digital. Silver bars are best for investors. They have the highest purity available, are easy to verify for authenticity, and easy to sell quickly. They're liquid even in crisis conditions. Silver coins are also good for investors. Government-minted coins are trusted and easy to authenticate. They're slightly less liquid than bars. Silver jewelry is a hybrid option. It has personal value plus investment value. It's less liquid than bars or coins but works if you'd wear it anyway. Silver futures are something you should not buy. They require active trading, leverage is built in for extra risk, and they require the exchange to stay functional. Silver ETFs are okay as a secondary option. They're convenient and liquid, but you don't own physical metal. In extreme market conditions, liquidity can dry up. Whoa. In normal markets, digital silver is fine. But we're heading into a potential supply crisis. In crisis conditions, physical silver, something you can hold, touch, and sell to anyone, is your best insurance. Buy bars or coins. Hold them. When prices spike, you can sell to jewelry shops, coin dealers, or online platforms. You have options. Digital positions mean you're dependent on the exchange staying open and functioning. Yikes. Action 4. Know your time horizon. My prediction is a spike in 90 days. But here's the risk. What if it happens in 60 days? Or 120 days? In scenario A, the optimistic case, prices spike in 60 days. You bought in March at 65 Indian rupees per gram and sell in May at 80 Indian rupees per gram. That's a 23% profit in 2 months. In scenario B, the case as I predicted, you bought in March through May at an average of 71 Indian rupees per gram and sell in June at 85 Indian rupees per gram. That's a 20% profit in 3 months. In scenario C, the worst case, the spike happens in 120 days. You're holding for 4 months. Your capital is locked up. You have opportunity cost. What else could you have done with this money? The point is, know how long you're willing to hold. If you need the money in 60 days, don't invest expecting a 90-day spike. If you can hold 6 months, great, you have flexibility. But decide before you invest. Because if prices don't spike in 90 days, you need a plan. Do you hold longer? Do you sell at 10% profit instead of 25%? Do you cut losses? Decide that now. Not when you're panicking in July. Okay, so you understand the supply problem. You understand the demand problem. You know what to do. But here's the bigger picture that nobody's talking about. Silver isn't just about jewelry. Silver is about purchasing power. When commodity prices spike, it means your money is worth less. That 100,000 Indian rupees in your bank account? It buys less than it did 3 months ago. Silver spiking 25 to 35% isn't just jewelry costs more. It's your rupee is worth less. The rupee has declined 8 to 12% against the dollar in the last 24 months. Your savings are losing value. Commodity prices rising is part of that. So here's why this matters. If you ignore this, you're essentially saying, I accept losing 25 to 35% of purchasing power on the silver I buy. You're accepting the loss. But if you prepare for it, buy sooner, lock in prices, diversify into silver, you're either protecting yourself or profiting from it. You're not accepting the loss. You're making a choice instead of having one forced on you. And here's one more thing, silver isn't isolated. This same pattern, supply constraints, government policy miscoordination, seasonal demand surges, is happening in other commodities too. Copper, nickel, even some food commodities. Silver is just the clearest, most obvious case right now. It's a test case. If you understand what's happening with silver, you understand what's coming with other commodities. That's why I'm making this video. Not just to help you save money on a bracelet, but to help you understand how markets work when supply gets tight. Because this isn't going to be the last time this happens. Okay. Here's what I need from you. I'm making a specific prediction. I want to know if I'm right or wrong. Take action within 2 weeks. Don't just watch this and forget. Actually do something. If you're a jewelry buyer, call your jeweler. Get a price quote. Lock it in. If you're an investor, buy your first tranche of silver this month. If you just want to watch, set a reminder for June 15th to check if prices actually went up. Don't be passive. Be active. Even if your action is just set a reminder, that counts. In 90 days, I'm going to post an update video. I'm going to tell you whether prices actually spiked. How much did they spike? Where did I get the timing wrong, if I did? What should you do differently next time? You're invited to come back and check. You're invited to comment and say I was right or completely wrong. Here's why. I genuinely want the feedback. Step 4. Share this with someone who buys silver. This information is only useful if people actually use it. If you know someone buying silver jewelry for a wedding or festival in the next 6 months, send them this video. Not because I want views, but because they need to know this information to make better decisions. Forwarding this to one person who's planning a May wedding could save them Indian rupee 2,000,4000. That's worth 30 seconds of your time. Step 5. Bonus roast me if I'm wrong. Look, I might be completely wrong about this. Prices might not spike. The government might reverse the policy. A new mine might open. Something unpredictable could happen. If that happens, I want to know how I got it wrong. Comment below and tell me exactly where my analysis failed. Because that feedback helps me do better next time. I'm not looking for cheerleaders. I'm looking for people who actually engage with the argument. Here's the bottom line. In 90 days, one of two things will happen. Scenario 1. Prices spike 25 to 35% like I predicted. You'll know I got the analysis right. And you can trust my analysis on the next issue. Scenario 2. Prices don't spike. Or they spike less. Or they spike more. I'll be wrong or partially wrong. And that matters. It changes how you should think about my predictions going forward. Either way, you'll have information. And information is power. Check back June 15th. See what actually happened. Decide what you believe. I'm not asking you to trust me blindly. I'm asking you to listen to the argument, take action based on what makes sense for you, check back in 90 days to see if the analysis held up, and update your thinking based on actual results. That's how you build judgment. Not by trusting one person, but by testing predictions against reality. So test mine. Come back in 90 days. Let me know if I was right.